Everyone's been talking about nvidia, AI, and the trillion-dollar chip boom. But while the spotlight has been on them, another chipmaker has been quietly setting up for a massive rebound. Intel. Yes, Intel, a company that many people had written off, is suddenly showing signs of a comeback. After years of setbacks, delays, and missed opportunities, Intel is finally showing real signs of life. Investors are paying attention because this once-forgotten tech giant has doubled its stock price this year, rising nearly 100%. The big question is whether this is the start of Intel's long-awaited comeback or just another short-lived rally before reality hits again. In this video, we break down what's really happening at Intel, why investors like nvidia, SoftBank, and even the US government are putting billions behind it, and what Intel's latest financial results actually tell us about its future. We'll unpack what changed, what the numbers are really saying, and whether Intel stock could be one of the smartest comeback bets of the decade. Welcome to the Wealth Wisdom. Here, we break down the biggest stories in tech, finance, innovation, and stock market analysis in a way that's easy to follow and worth your time. Before we dive in, please like this video, share it with your friends, and subscribe to support the channel. Disclaimer: this video is for informational and educational purposes only. It is not financial advice. Always do your own research before making investment decisions. Investing involves risk, including the loss of principal. So how did Intel go from a chip dinosaur to suddenly trending again? Intel, ticker symbol INTC, has been through one of the toughest decades in tech history. Once the undisputed leader in semiconductors, Intel lost its crown to competitors like nvidia and Taiwan's semiconductor manufacturing company. AI spending exploded, cloud computing surged, and data centers around the world began replacing Intel's chips with faster, more efficient designs from competitors. By the end of 2022, Intel was bleeding cash, pouring billions into research, development, and new manufacturing plants just to stay relevant. Fast forward to 2026, and the picture looks very different. Intel has stabilized its cash burn, cleaned up its balance sheet, and attracted some serious investors. This is not just a turnaround, it's a full reset. That reset started with new leadership. Intel's new CEO brought deep semiconductor industry experience and immediately made bold decisions. One of the first major moves was selling a large stake in Intel's programmable chip subsidiary, injecting much-needed cash into the company. This signaled to Wall Street that Intel was done playing defense. Then came the real surprise. nvidia and the US government both decided to invest directly in Intel. nvidia invested billions, while the US government provided strategic funding to rebuild domestic semiconductor manufacturing. Intel's financial position suddenly looked healthier than it had in years. The company expanded manufacturing capacity across the US as part of its reshoring strategy, reducing reliance on overseas production for the first time in years. Intel's story shifted from delays and layoffs to momentum and rebuilding. Now let's talk numbers. Intel's third quarter 2025 revenue came in at $13.7 billion, a 3% increase year-over-year. While that may not sound massive, for a company that has struggled to grow, it's a meaningful step forward. Gross profit surged to $5.2 billion, up from just $1.9 billion a year earlier. That is a huge improvement in profitability and a sign that cost controls and efficiency measures are working. Operating expenses dropped sharply from $11 billion to $4.5 billion, a reduction of more than 50%. This shows Intel is becoming leaner, more disciplined, and more focused on efficiency. Last year, Intel posted a massive operating loss. This quarter, it returned to profitability with operating income of $683 million. That is a dramatic reversal, and a clear sign that Intel's core business is generating real cash again. Net income tells an even stronger story. Intel went from a massive loss last year to reporting billions in profit this quarter. Earnings per share improved significantly, even on an adjusted basis. Intel's cash position also strengthened, rising to over $11 billion. Total current assets increased, while total debt declined. Any reduction in debt during a turnaround is a positive sign. All of this tells investors one thing clearly: Intel isn't just surviving anymore. It's stabilizing. The bleeding has stopped, and the recovery is underway. However, there is still a major challenge: Intel's foundry business. Intel operates two major segments: the legacy chip business, which designs and sells CPS, and the foundry business, which manufactures chips for other companies. The legacy business remains profitable, but the foundry division is still losing billions. The foundry operation is capital-intensive, slow to scale, and expensive to maintain. On top of that, many potential customers hesitate to work with Intel's foundry because Intel also competes with them in chip design. Some analysts believe the solution could be a structural split, separating chip design from manufacturing. While not confirmed, such a move could significantly change Intel's long-term growth story. At its current market value, Intel looks cheap compared to nvidia. Stripping out the loss-making foundry business, Intel trades at a reasonable valuation for a tech giant rebuilding its position. Investing in Intel today is a bet on the future. It's a bet on leadership execution, government support, and long-term AI and manufacturing growth. Major players clearly believe in that future. Nvidia invested billions. SoftBank added more capital. The US government pledged significant financial support to strengthen domestic chip production. Intel has also announced major partnerships with Microsoft and Nvidia, combining Intel's CPU ecosystem with Nvidia's AI acceleration. This collaboration could re-establish Intel as a meaningful player in AI hardware. Intel expects steady revenue moving forward, with short-term earnings pressure driven by reinvestment, not operational weakness. Intel's road back to dominance will take time, but the signs are finally pointing in the right direction. After years in the shadows, Intel is showing real life again. If you found this breakdown helpful, like the video, share it, and subscribe to the Wealth Wisdom for more clear and simple stock market analysis. Stay curious, stay informed, and see you in the next video.